Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso, and today we're going to be talking about what is financial freedom. Anthony, when I say financial freedom, what comes to mind? Maybe a definition or some misconceptions? What do you think of?
To me, what it does is I think there's a lot of misconceptions, and there's no real definition of it. I think a lot of people say, "Hey, I want financial freedom, or I want financial independence," but I don't think they really have thought that through. Like, what exactly does that mean?
I would totally agree with you. Right? That's just this arbitrary kind of idea that people kind of grasp or kind of gravitate towards.
Yeah, sometimes I ask people. We always talk about goals, right?
Yeah.
We're big on what people's goals are, and sometimes people will say, "I want a millionaire."
Mhm.
I mean, I want to be $1 million. Or I want $2 million.
Yeah.
In fact, there's even a show about it, right? Who wants to be a millionaire?
Yeah.
Like it's this elusive dream.
Yeah.
Like people want to be as a millionaire.
Yeah. Remember that commercial when they used to have people walking around with their number
Mm-hmm.
under their arm, and they're like, "Oh, what's your number?" "Oh, mine's 5 million. Mine's 1.5 million." Right? Totally arbitrary, but that's what came to mind.
Right. Yeah. And when people say I want to have 5 million, well, how'd you get that number?
Mm-hmm.
And I think the problem is, and the biggest misconception is, people are focused on net worth.
Why do they focus on net worth?
Why? Because I think that's what we're told, or that's what, there's the Forbes, top million, it used to be millionaires, but now it's billionaires list.
Yeah.
Right. There's all these lists. Oh, you're a millionaire or a billionaire, when it's always focused on net worth. And I think that's a big problem.
I totally agree. Right. We're taught to chase net worth. And I think that traditional model is set up that way. It's, hey, come talk to me and just check in every 6 months and I'll tell you how it's doing. And this thing is just growing over here, right? Don't worry about anything else. It's just getting bigger, right?
No, I've got a client. She's 65 years old. Okay. She has a government pension.
Okay.
And she's worth $2 million.
That sounds like a good scenario.
Like, there's probably a lot of people that would say, "Hey, if I'm 65, I have pension for as long as I live and $2 million.
Yeah.
You're golden."
That would be most people's definition of success.
Right. But here's the problem. Net worth doesn't mean cash flow. When you look deeper in this example, $1 million of that is raw land.
Okay. Illiquid.
Yeah. Illiquid, and it's actually a negative cash flow, right? It's one thing if you have rental income where you're renting the property, but this is just vacant land, and each year she has to pay property tax.
Yeah.
So it's a negative cash flow. Now, the other $1 million is broken up into two buckets. $750,000 is inside an IRA.
Okay.
But because of that pension, she's in about the 30% tax bracket.
So what you're telling me is that she doesn't really have $750,000.
No, at the 30% tax bracket, that's closer to about $525,000.
Mm-hmm.
Now, so really the $525,000, another $250,000. So we're real maybe about closer to $800,000, right? $800,000 is quite a bit less than $2 million. But the problem she's having is, even with that pension and the net worth of $2 million, there's not enough cash flow coming in. So she's starting to drain that account and having concerns of running out of money. That's the problem with focusing on net worth.
Okay.
And really with net worth, Karen, what do people really want? Like, they say that financial independence, but really, what are they trying to accomplish? What do they truly want?
It's funny. It's a good question, because when you talk to people, and when we talk to them about their goals, right, you always have the surfacey answers, which are, right, I want income, right? I want passive income. I don't want to work for it. Yeah, cash flow. But when you really talk to them, what they want is they want time. Right? They want time to go do what they want or to spend it with who they want, right? The other family or the loved one, something like that. So really cash flow is just buying time,
I
right?
like that.
Yeah. You're welcome.
Right? Yeah, I'm impressed.
Yeah,
Good
write
job.
that down. I should make a shirt of it. So yes, so when we get to cash flow and we talk about that, and we finally get down to kind of what somebody really wants, perfect. Now we've got something that has a goal, but now we need to make it tangible, and now we need to be able to measure it, right? And so, how do we measure cash flow, Anthony, or time, or what somebody's goals after?
Well, really, what we want to accomplish is we want to be able to pay their monthly expenses.
Perfect. Yep.
Which that's not that difficult to calculate.
Mm-hmm.
When we find out what your monthly expenses are, and then now that you have that goal, right? That's one of them. Well, and then the goal is that we want to create passive income or cash flow that is going to be higher than the monthly expenses.
Mm-hmm.
Which, to give full credit, it's not like we came up with that, right? That's from Robert Kiyosaki, Rich Dad Poor Dad. If you haven't read that, I would highly encourage you to check it out. And why we like about Robert Kiyosaki is many things, but one is he explains things pretty simple.
Yeah. Even
right?
you can understand.
Exactly. Right. And what he says is to get true financial freedom is you want your passive income to be more than your monthly expenses. Or what we say is, your monthly expenses abbreviations are ME for me, and abbreviations of passive income are PI for pie. So ideally, we're kind of like, what you want is you want your pie, your passive income, to be bigger than me.
Mm-hmm.
Now, Cameron, now that somebody knows what their goal is and how they define financial freedom, how does that benefit them?
Yeah, it benefits them because now we have something that we can kind of aspire to or something to gear towards. And so once we've got that goal, now we can start putting a strategy together to address that. And that typically changes someone's focus from net worth to cash flow. And I think I've shared this before, but I'll share it again here because I think it's fitting is, I've had this conversation many times over the years, but I just had it recently with a gentleman, and he was talking about whether he should keep money in a qualified plan or whether he should move it and look at buying some cash flowing assets. And, we had the conversation, and he kind of went away, and he came back a few months later, and he was locking up a few investment properties. And we started talking a bit about that. And I asked him what ended up being kind of the deciding factor. And he said, you know what? He goes, it was actually when you made a point, or you asked me a question, you made an observation, or you shared an observation of working with some older people. And what I told the gentleman was, you know what? I've seen people, and I've worked with clients and sat across the table from them, that when they're retired and they only have those IRAs and 401ks and those qualified plans, is they are absolutely glued to the TV and what the stock market is doing. And it's not only is it all encompassing, but there is a level of anxiety and worry that comes along with that. And what he shared with me was he actually saw that in his parents. And he didn't realize it until we had this conversation. And so what he has done when he left, when we hung up the phone, is he did end up choosing to liquidate those funds and start acquiring some rental properties. And he came back, and what he was telling me was he's never, no, I can't say never, but what to paraphrase is that what he really enjoyed about purchasing these properties is going through the process of going through and buying this property and securing this asset and seeing that he's acquiring monthly cash flow, and then knowing that all he needs to do to increase it is to turn around and go do it again. And he really enjoyed the idea of taking control. And the word comes to mind of empowerment, right? He's taking over control and taking over his personal finances and his financial future. And there's a big difference between sitting back and just waiting for something to happen or not happen versus taking control and making sure that you're going to get to where you want to go. And so Right? That's what comes to mind when you ask that question about once we have a goal in mind, man, we can get there.
Right. Yeah. Because a lot of times you got to know, in order to get there, you got to know where there is.
Mm-hmm.
Like, what is the goal? What is the destination? And when you know that, that's going to help you make better decisions. Like in this example, should I put the money, leave in my 401k, or should I buy rental properties? That's when you go back to your goal. Well, which one is going to help me achieve my goal?
Yep.
And so this can also allow you making decisions, on which house you're going to buy, or maybe some of your living expenses. Because a lot of times we talk so much about the passive income piece.
Yeah.
But there's also the me piece. I mean, are you increasing your overhead? Like every time you get a raise or extra cash flow comes, maybe you can use that to make a decision. Well, maybe I'm not going to buy that expense. Maybe I can save that money and put it to work to increase my pie.
Awesome. Yeah. What also comes to mind is, and it's been a while since I had this conversation, but the idea between self-sufficiency versus self-reliance, right? Is, man, when you're focused on cash flow and somebody's objective is that financial freedom, is, man, when you're just at that point of kind of taking over your monthly expenses, is you're providing for yourself, right? You're self-sufficient, but self-reliant to me is kind of the goal, I guess, is because, man, I don't only want to provide for myself, is I want to be able to provide for others, right? I want to be able to kind of lift others up with me and also show them how to also become self-reliant. And so, it's kind of a bigger mentality than just providing for quote unquote me.
I think one of the problems of focus on the net worth is your goal is to build up that net worth. So what that means, if you spend money, it's lowering your achievement towards your goal.
Yeah.
And a lot of times we could be hesitant where we don't want to spend money because we want to build it up and achieve that net worth. But with cash flow, right, that cash flow is coming in each month. So it's okay for you to enjoy it and to spend it. I know I've talked a little bit about this book I've been reading called Die with Zero. And one of the things he talked about was really of getting that happiness and enjoyment out of life. And money is definitely a tool that can help you enjoy it more. But one thing he talked about, what really helps our experiences and our enjoyment, is how much time we have, how much money we have, and our health. When you're in your 20s, you got the health, you got the time, but you don't got the money, right? But then the problem is when you're in the middle, maybe middle age like I am, I got the health, but time. Yeah. I don't have much time. I mean, I have the money, but I don't have the time. And then when we're older, we have the time and the money, but maybe we don't have the health.
Yeah.
So what he's saying, and this part I agree, is we don't know how long we're going to be here, right? And we can't focus solely on finances. We need to be able to enjoy it when we have the time and when we have the health. So by having that passive income, that can free up some time early. So you can start enjoying that time with the kids or those experiences or going to the places that you want to go. And again, since you're not focused on the net worth, and that, I don't think you're going to have as much guilt as in enjoying those experiences.
Absolutely. Anthony surprisingly shared some really good points there with us. So let's say we wrap this up, huh? Today we talked about, good. You got something?
Well, let's talk about how this relates to infinite banking.
Okay.
Right? I mean, and the key thing here is with infinite banking is a process.
Okay.
Right? We're not saying with infinite banking, we want you to invest to leverage that to buy those cash flowing assets. And we can show you mathematically while you're create more cash flow by running things through the policy. In addition, when your money is locked up somewhere and you can't touch it, when those opportunities come to create cash flow,
Can't do anything about it.
You can't do anything about it, right? But so in order to take advantage of those opportunities, it's going to take capital. It's going to take cash.
Mm-hmm.
So you need to store your money somewhere where it's accessible. So when those opportunities come, you can come and take advantage of it.
Great point.
Thanks, Cam.
Do you have anything else? No, it's just kidding. That was a really good summary of kind of what is financial freedom, right? We talk about this a lot, and we talk a lot about it with clients as well. And sometimes there's misconceptions, and so we touched on those. And then also what we did is we shared really what people want at the end of the day is they want time to go exchange and go spend doing stuff that they want to do. So,
and you know what? Again, as Robert Kiyosaki's equation for financial freedom, is your pie bigger than me or bigger than you? If your pie isn't bigger, then this might be a good sign to maybe talk with us, where we could get on a free discovery call where we can kind of give you some ideas, talk about your goals, and see whether we can help you, and if so, how. So there will be a link in the show notes to schedule that call. Go make it a fantastic day.
Take care.